So, what happens when global markets, we're talking billions of dollars, and even the price you pay for gas, are all held hostage by a single social media post? Today, we're breaking down one absolutely extraordinary day where the entire financial world swung between the fear of war and the hope for peace. Let's dig into how one single message put the entire global economy on a knife's edge. This quote from Nigel Green, the CEO of DeVere Group, just nails it. You got to think of the market like a tightrope walker, right? That's what was happening. Every little whisper of a change in the Middle East, any hint of de-escalation, sent shockwaves. It really sets the stage for the incredible volatility we're about to dive into. All right, so to really get a feel for this rally, you first have to understand the fear that came right before it. I mean, investors weren't just a little nervous, they were actively bracing for the absolute worst. The tension was something you could practically feel.
And this number? It says it all. Plus 30%. Even after the good news broke, Wall Street's so-called fear gauge, the CBO Volatility Index, was still up 30% since the war started. That tells you just how much anxiety was already baked into the market, just simmering right below the surface.
And then, boom, in a single moment, everything flipped. It wasn't some formal announcement or a big press conference. Nope, it was a social media post that sent shockwaves through the global economy. A pretty powerful reminder of how geopolitics and these high-speed markets are all tangled up together in real time now. The reversal was just stunningly fast. Over just one weekend, the public message went from this hardline ultimatum, a 48-hour deadline threatening to escalate, to something totally different. By Monday morning at exactly 6:23 a.m. Eastern, the entire tone just shifts from confrontation to diplomacy. And here they are. These are the words. This was the post that, as one analyst put it, turned the entire market on a dime. I mean, after weeks of things getting worse and worse, this little hint of substantial progress was exactly what investors were desperate to hear. So what was the reaction? Oh, it was immediate and it was explosive. The Dow Jones surged over 630 points. All three major indexes had their best day in weeks. This wasn't just a small bump, okay? This was a full-blown relief rally, and you can bet trading algorithms just amplified that move in milliseconds, all sparked by that one message. But here's the really crucial question. How real was this peace rally? Because almost as quickly as all that optimism appeared, some pretty serious cracks started to show up in the story. Yeah, so there was a massive disconnect here. On one side, you have the U.S. claiming productive conversations. But on the other, Iran's foreign ministry is flat out denying that any direct talks with the U.S. had even happened. This contradiction just threw this huge cloud of uncertainty over the entire rally. And this quote from Louis Navellier, he just perfectly sums up the feeling on the ground. Sure, the gains were great, everybody loved that. But the whiplash, that violent swing from fear to hope and then right back toward uncertainty, that was incredibly unsettling for everyone. And, well, sure enough, that fragility became reality pretty quick. As those conflicting reports started to sink in overnight, all that optimism just kind of faded. Oil prices crept back up, and stock futures cooled right off. The peace rally was already sputtering out. Okay, so we've been focused on Wall Street, but what about Main Street? How does this high-stakes drama actually affect the economy for, everyday people? What does all this mean for the rest of us? And this, of course, is the first question on just about everyone's mind. The price at the pump is probably the most direct way we all feel the impact of what happens in the global oil markets. So here's the deal. Even in the absolute best-case scenario, experts don't see oil getting back to where it was before the war. They're saying there's a new price floor, somewhere around $85 to $90 a barrel. And in the worst case, if this conflict drags on and the Strait of Hormuz gets shut down, we could see oil prices hitting a staggering $150 a barrel. But it's not just about energy prices. There's this other, stickier problem that's keeping overall inflation high, and it's something called service inflation. We're talking about the rising costs of things we all use: haircuts, childcare, car repairs. And it's all being driven by surprisingly strong consumer demand. This story is a perfect real-world example. You've got a dog daycare in Nashville that raises its rates by 9%. And what happens? They don't lose customers. They break their daily record. The owner said nobody even complained. That tells you just how strong consumer spending has been. And it's that strength that has economists worried about inflation staying stubbornly high. So, This single chaotic day on the market, it actually shines a light on some much deeper pressures facing the entire U.S. economy, things that go way beyond this one conflict. And looming over everything is this number, $39 trillion. That's America's gross federal debt, which had just crossed that mind-boggling milestone. A number that big creates a really difficult backdrop for any new crisis, whether it's economic or military. And the cost of this war is hitting at just about the worst possible time. The government's already dealing with a nervous bond market that's demanding higher interest rates. Then you add in the domestic chaos from a government shutdown and massive disruptions to air travel. The war's price tag is just one more huge strain on a system that's already stretched pretty thin. This one sentence from our source material just sums up the whole situation perfectly. America's pocketbook and its military are both showing their limits. I mean, think about that. For the first time in a long time, both are being tested at the same time, and both are showing signs of real strain. This could really be a turning point. Which brings us to this final critical question. Was that insane market rally a sign of real, genuine optimism based on actual diplomatic progress? Or was it just the reflection of a market so desperate for good news that it was willing to grab onto any little glimmer of hope it could find, whether it was real or not? I guess only time will tell.